fine. This link here. That's crazy. Good. All right, just waiting for Donnie, and then we can get started. Sure. Give it some time. All right, looks like we'll wait for this. All right. Hey, Donnie, how's it going? See if I can get this going here.
Hey, K². Can you hear me?
Yeah, can you hear me, Donnie?
Yep, I can hear you.
Nice, nice. How's it going?
It's good. Just came back. Mrs. had her surgery, so she's recovering. And now that I got the time off from work to help her recover, I'm gonna take advantage and try and learn as much as I can and finally pass this FTMO and get it over with. It's been a nightmare so far.
You might as well. We got this time, huh?
Exactly, exactly. So I've been what's what I'm looking for? I've been trying to use the same risk management that you and I were discussing. It was risking 5%, right? Or was it risking 3?
It's up to you. It's up 3 or 5, just depending on how you want to do it. If you're trading a personal account, then yeah, 5 would be fine. I mean, it would depend on how big your account is too, because obviously, if you have a big account, you can do 3%. It'd be equal to if you're doing 5% on a smaller account. So I think it just depends on your account size. What your goals are, because regardless as to like what percentage you're risking, our win percentage is pretty high. So it'll still balance out regardless whether you use 3% or 5%.
True, true. I figured the same way too. And now that the last year is over and done with, the election's done with, everybody got their stimuluses. I feel like everything's going back to quote unquote normal as possible. So I was just sticking to like the Dow and maybe every now and then like trading UJ. I was trying to find like a pair that I like the most, or one that like I gravitate toward the most. And I think the one that I'm the most comfortable with is like GJ and UJ. But if I had to pick one, I would pick like UJ, just
Yeah.
because I feel like it's just more consistent with the trends. So, and then like on top of that, when I'm awake during New York time, it's way more momentum. You said peace out. All right, bye, baby. Bye.
I agree with that too. I agree with that too. UJ moves a lot smoother right now because what's going on with the economy versus like GJ. Because the problem with GJ is that there's a lot of issues with like Brexit and stuff that was happening a couple weeks ago, or
Yeah,
like the entire year actually. So like GJ has been kind of all over the place, but UJ has been a lot smoother because obviously the U.S. economy is not, and it's obviously going to go up and down according to how the news is playing.
exactly, exactly. So I think one of the first things I want to just go over with you is like even after I pass the FTMO, I want to find a way to find a good, I guess you could say, rhythm or like way to organize my day as far as like trading, because how it is right now basically is this. So I wake up at and these are all Eastern time numbers, right? So I wake up at like 6:30, right? I get ready for work, and then I hit the road at like 7 a.m., right? And while I'm on the road on that like hour and a half drive that I drive, I'm trading and looking at my phone half the time. You know what I'm saying?
I used to do the same thing. Yeah, and I know what you're talking about.
Exactly. And then while I'm at work, they allow me to, trade indexes. If I look at anything else other than indexes, it has to be like Euro USD. I don't know why, for some reason, the computer just blocks it out. But even my boss, when he looks over my shoulder, if he sees me looking at indexes, he's like, okay, well, whatever. Because, our bank is in where's our bank? Our bank's in the NASDAQ. It used to be an SP, but now it's in the NASDAQ. So he doesn't mind if I'm looking at the NASDAQ or if I'm looking at the Dow, right? Even if I'm looking at charts and I'm on like yahoo.com and I throw up a couple of like moving averages on there. I'm like, okay, whatever. Because he does the same thing during the day for himself,
Mhm.
So technically I'm allowed to day trade, because as far as he knows, I'm following along with it, but I'm not putting in trades, But lately it's been so busy that I can barely look at the chart for like 30 seconds,
Yeah.
So I'm trying to find a way to like implement trading throughout the day. And I'm like, maybe trading like on H1, because as of late I've been doing M15, 15-minute time frame, and it's been working out pretty well. But when I go back to work, it's like out of the picture. It's like the minute I'm looking at something, an hour later, it's like a whole different picture,
Yeah, exactly. Yeah, no, for you, you're probably gonna have to stick with like the higher time frames because even myself, before I used to trade on the 30-minute when I was at work, and it's hard for you to check the charts every 30 minutes. And even for you on the 15 minutes, even worse. You literally have to be on the chart like 24/7. You can't take eyes off it because as soon as you take your eyes off the chart, you're gonna miss that entry. So I think
Exactly.
you should definitely, yeah, 1 hour should be good. I mean, 4 hour would be best, but you'd probably only get like one trade a day if you're doing the 4 hour, because I think so the 4 hour closes at, I believe, uh, what time is it for you? What time does 4 hour candle close for you? Because for me it's 6. And so for you, it would be
For me, let me look at it right.
I think it would be 9 and then 1. So it would be
Right now, the next one closes at 12.
12. Okay, so 12. So you got 12, 9, and no. 12,
12, 4, 8, 12.
12, 8, 4. Okay, 12, 4, 8, 12, basically. That's your time, right?
Yeah.
So if you're trading the 4 hour, then that would be the times that you would be looking at your chart. You'd only look at it at 4 a.m. before you go to work. You'd look at it again at what was the other number? It was 4, 8, 12. Yeah, so 4 o'clock and then 8 o'clock and then again at 12 during your lunch. So if you want to trade the 4 hour time frame, I think that'd probably be best for you. If you want to trade the 1 hour, you can do that as well, but the 1 hour still takes time. You still have to be on the chart at the end of every hour, and I'm not sure if that works with your schedule.
I don't mind it. I don't mind. Oop, you okay? Oh, hold on just a second. Sorry about that, Shawn. My daughter hit her head.
Oh, no, I heard her. I was like, oh, she.
Yeah. Oh, there you go. Okay. Yeah. So I think I might just do that. I think that brings me to my second question. Then is what should I be targeting like on a 4 hour? Should I be targeting about like a 50 pip move, maybe even longer, maybe 100 pip move? Because on FTML, wait, are we allowed to carry over on the weekends? I heard on the combine you're allowed, but like when you get your real account, they won't let you do that.
Yeah, no, on the during the weekend you won't be able to hold it once you're funded. You can do it during the challenge, but yeah, I mean, there's no point in doing it now because you want to get used to doing stuff like that, and then it'll just mess with your habits once you actually get funded. So I would just not trade on the weekends and figure out a way around that. I think for your targets, you should probably, if you're going to trade on the 4 hour, then I recommend you use the K2SR strategy because it'll depend on where the structures are, and you could always make re-entries or double entries if stuff starts to overlap. Yeah, I mean, it would depend on what you're applying. Because if you're using the K2SR strategy, like I do for all the signals, then you would determine where your TP is, where the next structure is. Vice versa, if you're applying something else, like any other strategy that you want to apply, then that would vary as well. So if you have a strategy that you like to apply, then that's how you determine where your target's going to be. Do you know which one you want to apply yet, or?
I like the K2SR, but I think I want to learn the pivots. I want to learn the pivots a little bit more. I'm comfortable with the K2SR because that's what I've been using so far, like the UJ and also like the Aussie pairs. Like I feel like it's been amazing with the Aussie pairs, but I feel like my entry is still off. Like how to say it? Like I don't know. It's just that I keep getting stomped out like really, really early. Maybe it's because I'm not drawing my zones correctly. And I'm jumping in at the. I don't know. Like I just keep getting stomped out way too early. Like something like 30% of the time. Like, and it's not all the time, but like 30% of the time, it'll probably go like 10 or 20 pips in profit and then just reverse. And it'll just go like way. But I'll hit break even. But if I didn't move my stop loss, it'd have been a stop loss.
Do you have like one that you look at? Maybe I can take a look at it, see if you did something wrong for it.
Let me see.
Because usually like there might be like one little difference that you could have changed, and that can make the whole difference with your position and stuff.
Yeah, it was. I think I erased it because I usually keep it on my chart, but I erased the positions on my chart because it's getting like messy and I couldn't see anything. But I know it was on GJ, and it was. Let me see. So if you're looking at GJ on the 15-minute time frame.
Or you're applying the K2SR on the 15-minute?
Yeah.
I personally wouldn't use it on the 15-minute because it's just there's too much choppiness on that.
That's why. Okay, well there you go. That would explain it.
Yeah, because the K2SR is meant for the 4 hour, but you can use it on the 1 hour. It's just when you go on the shorter time frames, like the 15 minute, like the 15 minutes meant for like scalping, you know? So the
Yeah.
thing is, if you're trying to catch these like big movements, odds are it's probably not going to move to that point. I mean, it does sometimes. Like right here, we had a buy signal, and if you were to take this position right here, you could have wrote it to full TP, but you might as well just have done it on the 4 hour because it still would have hit like like a whole day later. Uh, or I don't know. It does apply on the 15th. Do you know where it was? Maybe I could look at it to see if it's something that you did.
Trying to find it. I know it was somewhere before that big move, that big bullish spike up. I think it was like Wednesday, right? I think it's like right there on the right. Right 149.15.
140. It was on the 6th, right?
Yeah, so it had to be, it had to be on the 6th. It was like Wednesday, or I think it was Wednesday, yesterday.
Yeah,
right?
I'll see this one right here, 145, I think.
Yeah.
Okay, cool. Yeah, so if you took this trade right here, you would have wrote it up to this structure right here, which would have been about 10 pips. I'm not sure where you were aiming for.
I was aiming for a sell. So like that right there where your mouse was a second ago, boom.
Oh, this one right here.
Yeah. So I had it going all the way down to that support level, because if you on your same screen, if you look farther to the left where it says 139.541, all the way to your left. Yeah, you see right there?
Oh,
so to that lowest low.
Yeah.
That's why. So I was like, okay, I could ride this all the way down there, but it reversed. But I mean, I knew it was some profit, but I'm like, maybe I brought it down a little way too low, and that's just the way the ATR had it set up. But and I just followed that. So
yeah, so you took this one right here, and then you zoomed out from this point.
There you go.
Short positioning tool. Yeah, so it looks like it placed it right over here. Maybe were you on a higher time frame? Maybe.
Probably at that moment.
Yeah,
because I'm on my phone, so in order for me to get everything in the picture, sometimes I go to a higher time frame and zoom out as much as possible.
Yeah, because if you did this one here, it looks like it would have hit, but it might have been you might have been on a different time frame where it was too wide. So that might have been the issue there. But yeah, like I was mentioning here, there's a lot of choppiness here on the 15-minute. That's why it's kind of hard to really apply it. I mean, it does work for the most part. Like even right here, price broke structure, and you would have taken it down from this point to down here for full TP. And then same situation as it came up here and it broke below here, you take it again down here for another full TP as well. So I mean, it does work. I just don't know how accurate it is because this strategy was meant for the higher time frames.
Well, since I gotta do higher time frames, I mean that's perfectly fine. On UJ, can you like zoom out to like let's see H4, because I honestly don't even look at H4 that often. So on the 4-hour time frames, what I should say, let me see what it looks like there.
Yeah, so if you're looking at
UJ, yeah, that's much more clean.
Yeah, you can see how because the thing is you can just take the trade and just let it run pretty much. Like every time it breaks structure, like right here, we had a buy signal. It broke structure up here, and then you can pretty much ride this to the next structure for like a 60 pip win right there. And then vice versa, when it comes down here and closes right back below and you got a sell signal, you can take that sell right there for another full TP for about 60 pips again right there. And then you just pretty much just rinse and repeat, do the same thing over and over again right there, the full TP. So it's like 3 back-to-back wins right there using that one strategy. And then you just keep doing it over and over again pretty much for the most part. And then even right here, if you wanted to take this buy, you could have entered a long position right here, another full TP for another 60 pips. So you got 4 back-to-back wins right there. Again, right here, price break structure, you could have entered another long position right here. And then you probably reach this next structure over here for about 40 pips. So literally just looking at it right here from a bird's eye view, you had 1, 2, 3, 4, 5, 6 back-to-back wins for about 60 pips, another 60 pips, another 60 pips, another 60 pips. So about like 60 times 5, just trading that one strategy right there, you'd lock in about 300 pips. And then if you're trading like a standard lot, you could have made like about 1,000 off these trades right here from the 10th up until the 20th. So
that's ideally what I want to do, because I know I have my watch list. I have pretty much every single pair on there, even like the USD Mexican peso. And I'm like,
No,
Yeah,
that's actually a good pair. Like a couple guys in the group actually trade that, and it actually really hits. So like as funny as it sounds that you're looking at, the exotic pairs, that's one that actually hits pretty smoothly because it acts kind of similar to the U.S. dollar and JPY because they're so offset. Like peso is so much cheaper than the U.S. dollar, so it's a lot smoother in the directions that it moves in.
oh, so trading the peso maybe on a higher time frame may be profitable, you're saying?
Yeah, yeah, definitely. So if I pull it up right here, USD MXN. And I
Hmm.
apply the same exact strategy that we were just doing right now, because there's another guy in the group that asked me about this a long time ago when you first joined. If you were to draw your little zones here, it pretty much works the same exact way as you would have done if you were applying it for something like UJ. Let me see if I can adjust these right here. It's just it would depend on when you're trading it too, because sometimes the exotics, if there's like some craziness going on around the world, like how it was yesterday, you can see right here the market was kind of crazy because of what was going on in the US.
Exactly.
Yeah. So you kind of have to like know what's going on with current events, but I mean, it shouldn't be too hard. You turn on the news or even you at work, I'm sure people, your coworkers talk about it. And just looking at this here, this is probably not a good time to look at it because there's so many zones. But if we were trading it somewhere over here where it wasn't like just consolidating the whole time, it would actually play out a lot better. Because right here, it looks like it's just too close. But if we're to, let me just go back over here. I'll show you an example of when the market was actually moving decently. So like over here, for example, if you're applying it when the zones were a little more spread out, and let me see this right here. Yeah, so if you're applying this when the zones were more spread out like they were right here, you can see that there's actually a lot of entries that you could have taken here. Like whenever price broke structure, like right here where price broke structure, you could pretty much ride this down from there. I mean, same situation. This would hit full TP. It'd take some time. Same situation right here when price broke structure down here. You take another short position right there, and that would end up hitting. Oh, actually, would hit full TP. I think somewhere around here, somewhere close to it. I just don't trade the peso, so I don't know like what the proper zones would be. I mean, not the zones, the like TP and stop loss. Have you traded it before?
Yeah, for like 2 weeks, and I was, I want to say like maybe, I know it's about less
Oh,
than
there we go.
70% win rate, but and I guess I fell off of it because one day it was like in the strong range. And I guess I was just losing track of how to trade it. So I was like, let me go back, stick to normal pairs and be normal.
Yeah. Oh, and one thing that I noticed too, the reason why we had messed up zones on that last time we looked at it was because I was using the wrong data. Make sure you're using forex.com for your data, because when I was looking at it earlier, I was here on USDMXN on FXCM, and you can see that the zones here were like too messy, right? If you can see my chart.
Is it pain when you first came here? I'm sorry, say again, Shawn?
Now I was saying, make sure that when you're looking at your charts, you're using forex.com data, because if you look right here on FXCM, the chart, the zones here are all messy. But if you go over to forex.com data, it's actually a lot smoother. So if I go over
If I use Forex.com. Honestly, I didn't even know that made a difference, but yeah, I definitely do Forex.com.
yeah, because I just noticed right now when I was drawing those zones are way different for forex.com versus how they are on FXCM. So if I draw these zones here, it just depends on when you're applying it. But for the most part, these exotics actually move a lot smoother. The reason for that is because they're less manipulated, because not as many people are trading them. So
Yeah.
they kind of just move the way that they're supposed to move, and they're not getting pushed up like randomly throughout the day. Like if I go back to over here where the market was actually moving smoothly, and then we were to draw our zones over here, you can see that these zones are actually way more smoother than a lot of other pairs that you would trade. So like these zones right here for the peso down there, right here. and down there. And if I was to just show you like, any entries that would come up from this point, you can see here that they actually move a whole lot smoother. So I don't know if you can see it right there on the screen, but just showing you right here, like price, we have a sell signal right here. This was following like a break in structure. You could pretty much ride this short right here to the next zone for a full TP. And then same situation over here with the sell. Another one down there, full TP. And then another one right here for another sell when it broke structure for another full TP down here as well. So it just really depends. I mean, it works on all assets. There's no specific asset that you can, that you should focus on, but it does work on the exotics if you do want to use it for exotics. But then it would depend on your broker too, because not all brokers carry the peso.
Yeah, I have Hugo's Ways, and they.
Oh, so they carry, yeah, they should.
But and my next question was, I'm having also difficulty sometimes like moving. I feel like I moved my stop loss to break even too quick. So I want to know, how do I trail my stop loss? Like, I use a K2 exit strategy, but sometimes I can't jump back into. I guess it's a two-part question. How do I trail my stop loss, and how do I re-enter, or I should say, when do I re-enter a trade?
I never re-enter a trade if it hits, because the thing is, I never hit break even. I never hit like anything below that because I always move it to TP. So if I move it to TP, I close out profit. Once I close out profit, I move on to the next trade. I don't necessarily hop back in because that's just you being greedy, right? If you hop back in, and then you end up losing, you're like, damn, I should have just never hopped back in. And that happens most of the time. So like usually I never hop back in. I never recommend people hop back in. I never hop back in myself. So there's not really any advice I can give you to that, because that's just it. In reality, it's really greed because you already made profit off the trade and you're just trying to hop back in for some more profit. You know what I'm saying? So like, yeah. So like for a lot of people, they ask me that question all the time. And it's because a lot of people teach them to hop back in, but it's like you either let the trade run to full TP or you exit, in partials by moving your stop loss and profit. But you got to do one or the other. You can't keep doing one and then switch over to the other, because the thing with your profits aren't gonna balance out. Because the thing is, if you're writing them all to full TP, you're gonna eat some losses here and there, and then you're still gonna end up in profit, right? But if you move your stop loss for each one, you're probably going to have less losses, but you're going to have small profits. But at the end of the day, end of the week, end of the month, it's going to stack up because you avoided all of those potential losses and you're stacking up these smaller profits. You get what I'm saying?
Makes sense.
Yeah. So it just depends. If you want to move your stop loss and profit, then do that for every single trade. If you just want to let them run to full TP and stop loss, then you can do that too. But either way, they both work. One way or the other, as long as you stay consistent with what you're doing.
Okay, yes, it's gotta be one or the other. So either let it ride and you get some big losses, but you'll still have a lot of wins, or move your stop loss and get a lot of profits that are smaller, but you can compound essentially and stay profitable.
100%. Yeah, exactly.
I guess you're right. That does sound like greed. Let me cross that off the list then.
Yeah, no, because honestly, I used to do it all the time. I used to get out of a trade where I get kicked out at break even, and I'm like, oh man, I want to re-enter. So I re-enter at the same price, at entry when it comes back down, and then it ends up doing a full reversal on me, and I'm like, damn, I should have just took my profits or took my break even and just move on to the next one. I mean, you can re-enter. There's always ways to re-enter. Like what you can do is you can go on the shorter time frame and just re-enter when you get a signal again. But it's not something that I recommend, because I've gotten burned by it too many times, and I already know, like from my own experience, it doesn't work long term. Because like say the first time it works, right? Say the first time you re-enter a trade and then you make back some profit. The second time you get burned, right? And then what happens after that is you just keep revenge trading, because you keep thinking like, oh, I got unlucky this time, and you just keep doing the same wrong thing over and over again until your account just gets depleted until it ends up getting blown, right?
Essentially, yeah, that does make sense.
Exactly. It's happened to me a lot of times, and it's better. Like from my experience, it's better just to pull out. If you have some profit, be happy with your profit, and then move on to the next trade. Because the thing is, if you keep getting into that mindset, like it's like a gambler's mindset. You think you can just keep doubling down on the trade that you lost on because you think it's eventually going to go in that direction, but then it never goes in your direction, and you end up losing all your money.
You are right about that.
Yeah, I mean, I've been doing this for a long time, so I've ran into all these issues in my own. So it's, you know, a lot of people don't like to hear this advice, but I'm just being like realistic because it's happened to me.
No, I need give me the hard truth. So
Yeah.
I need to give me the hard truth. I don't want to. If I can, no offense, if I can avoid the mistakes that you made, then that may be 10 times happier. You know.
Yeah, yeah, it'll save you a lot of money and a lot of grief, like honestly, because I've lost a lot of money when I started, but you know, thankfully I started to break out of these bad habits, and then I became more and more consistent, and then now it's just, you know, rinse and repeat at this point because I already know what works and I know what doesn't, and I just keep doing what I'm doing, and it just ends up working long term.
And then I guess that brings me back to the next thing. How can I use pivots, or what's the best time frame for pivots? Let's say on UJ, since I want to run with UJ. What's
Yeah.
the best time frame on for pivots on UJ?
I mean, there's not really a best or bad time frame. It just really depends on how you want to like play your trade. Because the thing is, if you can be on your screen all day, you can always go on the short time frame. But if you're not going to be on your screen all day, you know, obviously the shorter time frame, I mean, the longer time frames would be best for you. Like I could show you like a bunch of examples here, like from, so this is the 4 hour. I mean, it looks like if you were to take some of these trades here, it looks like some of these would hit like something like this with, actually this one right here would have gotten stopped out. So this one would have gotten, or actually, so it's like a double-edged sword. Depending if you move your stop loss and profit, it reached like half TP here. So if you wanted to move your stop loss and profit, this is one of the scenarios where you could have avoided a loss, right? Because you could have just got out broke even or at some profit, or you would have had a loss at this point. But if you just kept, you know, running through and you took all of these sell entries right here, like this one down here, this probably would have hit full TP. Looks like this one over here would have hit stop loss. So it depends. If you're applying on the thing with the pivot strategy is that you kind of want to line it up with the zone. So like for example here, you could have avoided this loss right here because it was at a zone, right? So you already know what happens when it reaches the zone. It usually reverses on you. So like right here, you probably could have avoided this trade. You know, same situation over here. You probably could have. I don't know if there was a lower zone right here. There probably was. Let me see if I can find it. So for me personally, I think the zones are very important. Like, don't take any trades when it's close to the zone. It'll help you avoid a lot of losses that appear for specific trades. Like, let me see if this one over here was too close. Or actually, today there was news. I'm not sure if do you follow the news when you're at work, like the economic news?
Oh yeah, all the time.
Okay, definitely. Yeah, like today, you know, with NFP this morning, I forgot what happened, but it pushed the unemployment claims. So I don't know if you follow the news.
787.
Yeah, I mean it was crazy because the unemployment claims were less, and then the U.S. dollar just spiked up like crazy right in the morning. So for something like this, there's a lot of different factors that will factor in. So this was the 4th right here actually when that happened. Let me see if there was news that day too. Actually, the OPEC meeting was going on. So
OPEC affects the U.S. dollar too.
Yeah, because it's dealing with oil. So you know, the U.S. has a strong hand in oil. Basically, you know, anything dealing with oil, it's going to affect the U.S. dollar because you know their agreements. You know, there's always like those like secret agreements that go on. Like pretty much anything with oil would affect the U.S. dollar because you know it's kind of why we went to war in like Iraq and stuff.
Yeah.
So OPEC does affect it because oil prices, like the oil future prices, will affect the U.S. dollar in general. You know, the cost per barrel and stuff like that. So there's I mean everything affects everything. Obviously, you know, if it's something big, if it's like oil, U.S. dollar, or any major currency, if there's something that kind of ties into the U.S., it will affect it. I think it would affect it more because of the Japanese yen, because you know how it kind of goes opposite.
Yeah.
So the oil talk for OPEC would necessarily affect the JPY, but then if it affects the JPY, it's going to affect the U.S. dollar because they move opposite of each other.
So if let's just say if I'm reading the news and they said this OPEC, because what happened in the OPEC meeting, or let's just say the NFP, what happened in NFP is going to make the U.S. dollar get stronger. If the US dollar gets stronger, and this is UJ for example's sake, that means it's going to be bearish, right?
Not necessarily, because price doesn't necessarily move with regard to news. It moves with regard to how people react to the news. So so you see what I'm saying? Like sometimes like this news over here, like this news was bad news for the US, right? Unemployment claims.
Yeah.
But the US dollar gained strength. It just shot up, right? So it doesn't make any
All
sense.
right.
So that's why normally when there's news, I just don't trade during news time because it doesn't always go in the direction that it's supposed to go. Like kind of similar to like when COVID started, like in March. I don't know if you were following gold.
Oh yeah, definitely was.
So you're following, if you're like when you were following gold, you could have seen that like it did the complete opposite of what it was supposed to do during COVID. So like in COVID over here, where's it at? Yeah, COVID in March, the US dollar just like did the complete opposite, right? Because when COVID happened and the US like pretty much closed, the US dollar should have weakened, right?
Yeah.
It did the complete opposite. It actually strengthened very strong during the entire March. So like that's why I never trade based off news. Like I look at the news and I keep it in mind, but I don't necessarily like think, oh, COVID happened, US is closing, everything's going to shit, US dollar should be weak. Because what happened was when they announced that in March, guess what everyone else did? Like everyone did what they thought was going to happen. They bought a bunch of gold because they thought gold was going to go up.
Yeah.
So whoever bought gold, price got manipulated and it went the complete opposite. And they kept taking people's money because everyone thought, oh, it's just a dip, right? They're like, oh, it's dipping. So they bought gold, lost money. People bought some more right here because it's another dip. And then they lost some more money. And then people bought some more gold down here. They thought it was another dip. And then they lost their whole account at that point. You know what I'm saying? So that's why I never base anything off the news. I use that as like a last confirmation. Like I'll have an entry ready and then I'll use news or sentiment to identify, if market's going to be manipulated. Because the problem is when there's a lot of people buying gold, what the institutions are going to do the complete opposite. It's the same with like any other trade that you're taking. Like with the stimulus, everyone thought that the US dollar was going to go weak because they're printing US dollars. Obviously, the US dollar would weaken, right? But it did the opposite. It actually strengthened like temporarily for like a couple of weeks, I think. Like during that week when they announced it, I think what was it like? It was like around November, like around this time right here, like October into November. They announced the stimulus. They're like, okay, we're gonna give you $2,000. Everyone's like, all right, the US dollar is gonna weaken, right? Gold's gonna get stronger, and it did the complete opposite. It went down from November up until December, and then they finally pushed it back to where it was supposed to go. So that's just an example of not following news because even though the news points obviously in one direction, price isn't necessarily going to go in that direction as well. So that's why I usually just wait for the market to react to news. And then once it does react to the news, then that's when I make the determination, if I'm going to continue trading that direction or if I'm going to go against the sheep, basically, who are going in the direction that we thought it was going to go.
That makes sense.
Yeah. So yeah. Oh, go ahead.
And then, baby, I was trying to figure out a way to incorporate the momentum indicator a little bit more in my trades. Like, 'cause sometimes it's like just waiting for it to hit that certain bullish or bearish momentum. It's just like, I don't know. I guess I just miss it too often. And I was trying to find different ways to incorporate it. But I guess since I'm trading on a higher time frame, I guess it'll, show its face a little more often.
Yeah, I mean, there's another strategy that I'm like working on right now. I'm not sure if you said it on the session earlier, probably not. But there's another strategy where basically if the signal closes above the previous one, so like we have a sell signal right here, right? So if we have a sell signal right here and the buy signal closes right above it, like I haven't released the strategy yet, but I've been previewing it with everyone. When the signal closes above the previous sell like this, then we would take a buy entry right here.
If the signal closes above
the previous signal.
Oh, okay. Oh, that's interesting.
Yeah, because it's just identifying that the signal is that momentum swinging. Because basically, if price crosses where the previous signal was, then it's going to indicate that momentum is going to swing in the other direction. So we take a buy right here, and then pretty much just ride that up like that. And then like same situation over here. It's basically the same exact setup. So this buy signal right here crossed above the sell signal. So it's the same thing. It's indicating that momentum is going to swing upward. So if you took that trade right there, it would go again for like another full TP. So this is another one that I've been working on. Another situation over here. I mean, it's pretty simple. It's like really simple, but people still mess it up. So I'm not really releasing it just yet. I'm just trying to work out all the kinks. But like same situation here again. Price crossed this previous signal, and then you pretty much just write it up to full TP again, which is super simple.
So essentially, you're just entering on the previous indicator. You're saying right there.
Yeah. So basically, the way that I'm identifying this is that, you know, obviously these signals right here are identifying momentum swings, right? So momentum swing downwards, momentum swing upwards, momentum swing downwards, and then pretty much they just keep swinging back and forth every time you get a signal. And whenever the following signal crosses the previous one, so like right here, this is like the high of that signal. It's just it's confirming that momentum has broke up in the other direction, and then it's probably going to swing back up because this acts like a structure basically.
Oh, okay, makes sense. Makes sense. Makes sense.
So this is I mean, it's not one that I would recommend you just yet, but it's something that's, you know, it's in the works. So maybe when this is done, this would probably be a lot easier for you to follow. Or I mean, you could even do it yourself if you understand what I mean by this, because it's actually it's really simple. Like even like right here, in the opposite direction, like if this sell signal crossed below this buy signal right here, the previous one, then obviously, you know, this would indicate that momentum is going to continue on downwards. So in this situation, you could enter, you know, a short position right here, and then pretty much just ride that to full TP. It looks like it hit full TP right here, actually, yeah, on that first candle.
Boom.
And it works in both directions. So like same situation right here. So we have that sell signal that crossed below that buy. Again, right here, we have a buy signal right here. And it crosses above this sell signal, right? So it crosses above it. So you take a long position right here. Zoom out from there. Take a long position from there, and then it hits full TP right before it drops. Yeah, no, literally right there. It's pretty on point, and it works very simply. I think it works really good on gold. So I was thinking about starting to trade gold again. So like even here again.
I mean, even though it's a little spiky to me, but like I like gold for a while. I had good success trading gold with the pivots. I'm gonna tell you that too. This past couple of weeks, like using pivots on gold, like it's actually been spot on. Like if you flick it on really quick, I wait till it just, you know, retraces off each pivot and just jump in basically. As long as I'm following the trend, it's been pretty solid ever since.
Oh yeah, definitely, 100%. I used to trade gold like a long time ago until I got burnt really bad by it. But now that I kind of figured out this new strategy, I think it works pretty well, and it works on all the time frames too. So if you want to scalp on it, I mean, it works the same way on the shorter time frames. And it's still something that's a work in progress. Like I'm still trying to figure out what pairs it works good on, and I'm trying to figure out like anything that I need to add to prevent any losses. But just looking at it from like, you know, bird's eye view, it looks like it works pretty solid overall. So.
And then you said right now the main strategies used on the other pairs are just the K2 daily support resistance.
Yeah. So like for all the Forex pairs, I just trade the 4-hour and I do the K2SR strategy. That's probably the easiest thing that I use, and that's most accurate long term because it just doesn't require much work. You know, you just have to check the chart every like 4-hour candle close, and then just figure out what's an entry that's available. And if you just want to apply that for GJ and UJ, then you can do that as well. The only problem with you only trading 2 pairs is that it's gonna you have to like really pay attention, you know, because if you miss one trade, you don't know when's the next trade gonna happen. So I don't know if you like
windows for opportunity are very slim.
Exactly. Yeah, exactly. If you're only looking at 2 pairs, that's why for me I have such a huge watch list. But the strategy works good on all these pairs. That's why I don't necessarily follow them all. I just check every 4-hour candle close if there's any entries, and if there is, then I take them. If not, then I don't. But most of the time, I mean, it works pretty well. It's pretty much the only strategy I use for all the signals. So that says a lot that I only use one strategy for every signal, and it's been profitable all year round.
I think I'm gonna start. I'm gonna try applying the K2 daily support then on UJ, GJ, and I don't know what my friend likes. He likes NJ, so I'm gonna try. I'm just gonna try it on both. Well, let me get out of the Japanese world for a second. Maybe like on UCAT or something like that. But I'm gonna play around with it.
Yeah. Play around with it. See, just take as many trades as you want to, and then figure out what's most profitable for you, because that's how most people do it. They'll apply it to all the pairs, and then they'll see what wins most of the time, what loses most of the time, and then you can figure out what actually fits your type of trading style. Since you're only gonna be trading during a certain time period, and your times are limited for the most part.
So yeah, I'm gonna do that. I'm just gonna trade. I'm gonna trade off those pairs, and I'm gonna log them. And then I guess next week when we meet up, I'll show you. I'll go over all the losses of me. You can let me know, what I didn't see, and I'm gonna screenshot it before I jump in, so you can see what I saw, and then we can just go over it from there.
Yeah, exactly. Yeah, that'll be better, because then you could screenshot it from when before you took it, and then we'll see like where your zones were, where your entry point was, and then if that hits or if it doesn't hit, we'll analyze it either way, and we'll see, we'll just rate your trade from like 1 to 10. What could have been different? What could have been better? Stuff like that.
Cool beans. Okay, we'll do that. Well, thank you, sir. Appreciate your time, and I'm gonna get my notebook out. I'm gonna start, like I said, logging these. Or I heard TraderNo, the app TraderNo. I'm gonna use it on TraderNo and just log it on there, and then we'll go over it tomorrow.
Yeah, no, that'll definitely help. Journaling is very good, like in the beginning when you're not like super confident about your strategy or about like applying your trades just yet. But it'll definitely make a huge difference, because you'll start to spot areas where you could have done things better, or a mistake that you made that you wouldn't have spotted unless you actually went back and reviewed it.
Exactly, that makes sense.
Definitely.
All right, sir. I'll see you later.
All right. Hey, so for next week, what day was it? I'm gonna get you on the calendar right now so I don't forget.
Thursday or Wednesday would probably be better. Wednesday,
Okay.
same time.
6 p.m., right?
Yep.
Perfect. I'm gonna get you on here now so we don't miss that. And yep, you're on the calendar. So Wednesday, January 13th at 6 p.m.
Perfect.
Perfect. Sounds good.
Awesome. Well, see you later, sir.
All right, Donnie. See you next week.